important point is what is that what you're taking, right? What's your from this whole exercise, right? From this tape reading, I guess I'm gonna point it out, right? Few things. Number one, just look at how this liquidity was taken, right? This Asia London low. So there was this. Remember, I was talking about a reversal model, and in this reversal model, always this one, right? There's something. This level of liquidity, until unless something significant is taken, you can never trust this reversal. Remember this, because typically this is what happens. Your reversal, this is this takes the liquidity, and then the reversal happens, and then it trades back into the breaker or something, and then goes higher. So apply that same logic. Was this a good reversal setup? From that context, yes, because the liquidity was taken. Had they just engineered the liquidity and they just kept the liquidity alive, even if there was a reversal, very likely they would have taken it down and purged this, right? So it's very important you start identifying these things. Okay. Now, these things generally is not part of any other trading style that I have seen, right? Because a lot of trading is very mechanical, I see, right? And what is the problem with that kind of trading is that when you're looking at that, there's no I mean, you can still continue to do whatever way of trading you're doing, right? But always understand that how the market runs and how the market books. Okay. Um, so that's where when you start to identify this liquidity and you say, okay, you know what? Yes, the session liquidities have been taken out, and now there are clear low resistance liquidity run that I can see that can happen. And by the way, there is a significant inefficiency that has been formed 930. Can I trust this? Yes, because of all the reasons I just said, and also because you can limit your risk. Where if you, let's say, take a long here, where would your logical stop be? Because if the market has to go down, it's not going to come back again and close this inefficiency. So right at the bottom of it, right here, or if you want to be even more, give more cushion right here, right? So your risk is limited, and then you can go for partials here, here, right? Something like that. So that can be the takeaway, right? How when a reversal is forming and which reversal can you trust on, right? That's the takeaway. Okay. Let's see what ES is doing. So ES is still sort of hanging around right here. So you see there's no inversion that has been formed, right? So until that happens, you still have to be obviously looking at this London high right here. So now, as I was talking about it, you see this big candle? There was this inversion, right? Let's wait for the candle to close. And so there is this inversion, right? And also, so this one, look, this is the SMT that I'm talking about right here. Because if you look at it this high, you see that? Now, the price can trade on to this one and potentially see coming down. Now, the question is, what is the liquidity pool that it will come down to? It's already run these sessions low. Now, let's say hypothetically, if the Asia London low was still active, that would have been a clear liquidity pool to attack, right? Now, that has already been taken. So in this kind of a scenario, you know, you're sort of looking at it as at your risk reward, because really there is, if you really think about it, these are maybe potential lows right here, or lows right here, something like that, right? Whatever. So then the question becomes, okay, what kind of risk reward you're comfortable with? Now, what would be a good stop loss for this inversion? It could be either here or here, right? On this top of the candle here. What can be the thing? Now you can be get to 1:1, 1:1.5, etc., whatever the risk reward. Now, the reason, because there is no clear liquidity pool available resting here, session liquidity, at this point in time, at this hour, that's typically the um, way to look at. Now, there is also this new day opening gap, high and low, right? So this is also something, an important sort of a PD array that the price will keep on referencing to. So we also have to be mindful of this right here for NQ and for ES. Um, Again, similar, right? Because it has already taken the Asia high and low, etc. Also think about it in a way, right? When you're looking at the market this way, think about it as what would a typical retail trader be looking this line as? And let's say if I draw this line right from here and I do this, in fact, let me just draw this here, this one right here. What would a typical retail be looking at this line? A trader.
Stop losses or
Equal lows, so it's a
Yeah.
bounce.
Remember support resistance, our old good friend
yeah,
support resistance?
yeah,
Mm.
support, yeah.
Yeah, I mean this is going to be looked at support, right?
Mm.
And typically, where would they place their stop loss when they're looking at it as support?
A few points below the support line.
Yeah, so typically, something like that happens, where the price may invariably run to.
Mm.
Stop losses.
So that's
Yeah.
the stop
I mean,
hunting.
yes, that's
Ah,
exactly stop hunting, or in other words, seeking that liquidity,
liquidity.
etc., etc.,
Okay.
right? All that. So, so that is another way. When I'm looking at it, I'm always have that view. Okay, where are those support or resistance line? Uh,
Mm.
and I often just look them as liquidity pools than actually support and resistance. But many a times it helps you, right? Frame your trade. So that's, but yeah, the market is for now sort of moving slow, but sort of, I guess, yeah, consolidation, etc. And when some SMT like this happens, right? Another a point, and you can study it in your charts as well. Um, Let me just mark it as SMP. So that is really, when something like this happens, right? Always get your attention to the first order block. So this is a bearish SMT, right? Now this is a bearish SMT. Where is the first bearish order block here?
Right on the top.
Right, these two candles, isn't it? These two candles are bearish order block, right? And so let me mark it.
Would it not just be the one on the top, or you take the
I mean, this
both
is
of them?
series of up close candles right here.
Okay.
So yes, can this candle in itself be an order block? Yes, you can say that logically, and a lot of maximum sensitivity point is gonna be here, right? For sure, what you mentioned. But this is a
Mhm.
series of up close candles. So
Okay. Okay.
in its entirety is what the order block is, right? So what you will find, and this is something that you can also test, right, in your charts, etc., as you start to notice and mark it in your charts, that this becomes a high probability order block. Okay. So if the price trades back to it, you will see definitely, again, I'm using the wrong word. Definitely is not the word in trading. Very likely, high probable, you will see a reaction when the price gets here, a reaction, a bearish order block. So it's going to push the price down, right? So this is something again for your charts, right? After the SMT, mark the order block, either in case of bullish or bearish. So if it's a bullish SMT, mark the bullish order block. If it's a bearish, mark the bearish order block. Okay. something that you will find fairly useful. So you saw the reaction from the order block. So the price traded
Yeah.
From the
traded through
beginning
this
of it.
order block right here, and then so so for something like this today, right? When you have there is no session liquidity, etc., available, and it's still sort of chopping around. Typically, you can actually look at something like this, right? Where you want the price to come to your order block. So you can, right at the beginning, you can get to a trade. Let's say, for example, here, right? Where would you place your stop be? Let's say at the swing high, right? Now, if you do a 1-to-1 or 1-to-1.5, so this is something like 1-to-1, right? And this is something like 1-to, you can go even 1-to-2, something like that, right? So this is a another way, right? Just to have your risk defined, and then get onto something like this, right? Because this is a high probability. Why? Two things that I mentioned. One, it's an SMT. Second, it's during macro, right? So that's how you can help navigate this is the kind of structure that will help you navigate the markets, right, through the day, in terms of what's there, what's not there, where the price is going to, where it cannot go to, or rather, uh, uh, which PD array is delivering. So, for example, if I ask you which PD array or which array right now is delivering, it's this order block, right? Make sense? Price traded to the order block,
Yes.
empty, boom, right here.
Then
You see what the reaction is from the order block, and
that's amazing.
right, it's just unfolding. Now, what was the support that the retail is looking at right here?
Hmm.
This line. Where is the price already gotten to? Very close there, right? And
Yep, and there
here you
you
go.
go.
Here you go. And all the retail traders are like, man, my MACD was telling me something else. What happened? That's exactly what happens. So, you think about it, right? The other guys, much stronger, much bigger, much sophisticated, tech-wise. What are they going after? They're going after your liquidity.